Markets are overvalued, Josh. They're overvalued. I hear this on the comments all the time. I've heard this for years and years and years. It is the weirdest thing, man. I'm like, and then people say markets are all-time highs. So what does overvalued mean exactly? Someone explain that to me. And they'll use a chart like a PE ratio. The price to earnings ratio is higher than the historical averages. They'll use a chart like the CAPE ratio, the cyclically adjusted price to earnings ratio. And they'll say those are higher than historical averages, or they're much higher than historical averages. And then they'll say, look what happened in 2000. The CAPE was way through the roof, and then what happened next? Oh, and that just happened to coincide with when Schiller had written his book, Irrational Exuberance. The markets fell. I think he published that in March of 2000. And the markets proceeded to fall off a cliff, as if Robert Schiller, who's the author of the CAPE measurement, was a magician. He knew, he could see it. He's a prophet. And then Schiller, to his credit, he said, hey, the real estate looks like it's overvalued in 2006, 7, something like that, because he also has the Case-Shiller Real Estate Index, and that was overvalued too. All right, so we fast forward 15 years. I've been hearing the same thing since 2011. The markets are overvalued, blah, 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 blah. And if you had bought into that, you left the biggest bull market on the table that's ever seen, maybe at least the United States. I can't say in the world because I don't know that, but maybe Japan from like 1980, 75 to 1992 or something like that. I don't know. Which is unfortunate, because not only did you leave the biggest bull market on the table, and you also did what? You had to put your money someplace else, which if you put it in bonds, the bonds have had no rate of return for the last 15 years, basically. You put it in cash, which had, the interest rates 1% to 2%. You didn't beat inflation, taxes. You just missed out because you bought the propaganda that the markets are overvalued. They're too high. And it's not good. It's not good. And so that's why you need to hedge your bets to say, look, man, the markets when I hear markets trading the highest they've ever been, I said, well, welcome to history. Markets are always trading the highest they've ever been until they fall off a cliff and they go back up. No one would invest in anything. You're not going to invest in anything if you don't expect the investment to be worth more in the future than what you paid into it. No one would do that. That's why investing in a car is not investing. You're buying a car for the utility of it. That's why investing in a boat per se is not investing. You're buying a boat for the utility of it, an RV. Because most of these things, consumer goods, go down in value, all right? So these aren't investments, they're utility. I'm not even gonna say speculation, because you're buying a car like I'm in my 2017 Dodge Durango with 130,000 miles on it, because it takes you from point A to point B. I don't buy this because I think it's gonna be worth more. Now, if you wanna buy a baseball card, like I was talking to my man the other day, he bought a Caitlin Clark rookie card, and he made a boatload of money on it. Absolutely, because this guy's a genius. He's a legend when it comes to this stuff. That is an investment. It's a speculative investment. He goes, it might not. It's basically no value to it other than the greater fool theory. The greater fool theory is what someone else will pay for it, but he was willing to make that speculative bet, i.e., I think this could be worth more in the future than what I paid for it. So it's an investment. It's a speculative investment. Very, very risky because he could be wrong. You see what I'm saying? Look at these kids right here. Hey, hold on a second. Hey, yay! I'm not going to be stopping by lemonade because they're the wrong side of the street. But I always like to buy lemonade, and they should be regulated. If you lived in Massachusetts, they regulate the lemonade stands because Massachusetts sucks donkey balls. We know that. Can you imagine being a cop and being told by your municipality, Janie's got a lemonade stand. You got to make sure that she's OSHA compliant. The doom to America isn't Iran or China or Russia. It's our own insanity, man. It's our own insanity. The lack of risk taking, the need to regulate the hell out of everything. I was just reading today, by the way, that Portland, Maine, basically 1 in 5 or 1 in 4 businesses in downtown Portland are shuttered. And so it's boarded up in businesses all over downtown Portland on Congress Street and whatnot. This is my hometown. And I just chuckle because, you let the homeless run rampant. You let free reign of drugs, just criminals run rampant. Of course, what do you expect? And Portland, Maine, when I was growing up, was a pit as well. I mean, I'm not sure exactly the same reason for that, but I imagine there's something of similarity to there. And so you could buy a freaking loft in Portland, Maine in the 70s for nothing. You go to the Maine Mariners game at Cumberland County Civic Center, and you smell nothing but pee because all these drunks are down there. Old Port was a crap. I remember my mom telling me it was freaking a risky endeavor. And it was bad news, man, bad news. And so it was quite scary. And so for my mom to allow me to take the boat as a youngster on Peaks Island and going to Portland, Maine by myself in the 70s was nerve-wracking. But my mom was a hippie, and she goes, you have to figure it out yourself. Anyway, then they opened the Main Mall, and that even further declined downtown Portland because the Main Mall took all the business from downtown and put it into the suburbs of South Portland. So what's the response they're doing in the city of Portland? They're going to fine landlords who have vacancies for more than 90 days. I said, could you be any stupider? So if a landlord is going to be fined for having a vacancy for more than 90 days, why would anyone want to invest in real estate in Portland? If you're not going to solve the problem, which is Rudy Giuliani fixed this for New York City, you got to get rid of the crime and the free drug factories, free drug areas, man, and the homeless. No one wants homeless people around them, dude. No one does. And the idea, well, they're just down on the like, screw that, dude. No one wants illegals. No one wants homeless. Get them out of here. Anyway, so going back to the markets, we're at an all-time high based on price-earnings ratios. Okay. Well, we've had other times that PE ratios are high. One of the reasons PE ratios were so high for the last 15 years is because the interest rates are so low. Even Jeremy Siegel said that. He said, dude, and even Robert Schiller said the reason that PE ratios are high relative to historical norms is because you're not getting a competitive rate on bonds. You're just not. One of the reasons why you want to hedge, i.e. because bonds could have a renaissance. We'll see. I actually think they could. I don't know. I'm not going to go into, I can't predict this. I don't know. But if you look at the histoire of bonds, you can see that other than basically 1948 to 1968, and then basically from 1982 to 1999, bonds have kept up. Not 1982 to not 1982 to 1999. It was the aughts. Excuse me, not the aughts. It was the 2011, 10 to 11 till now. Essentially, bonds have kept up. Scratch what I just said about 1982 to 1999. Bonds crushed then, as without question. So bonds did quite well previously in a couple pretty significant time frames as well. And as such, there could be a renaissance of bonds as people potentially get a little bit more adverse to risk. I'm not so sure I'm going to bet my farm on that, but I do have bonds in my portfolio, long-term bonds that I think can pay off if that happens. But I'm still all into VTI. I got cash, I got bonds that by and large, the predominant amount of my holdings are in VTI because at the end of the day, stocks drive the markets, dude. And stocks are based on what? Consumer spending by and large. These are real companies. Costco's a real company. I just drank a coffee at Starbucks. It's a real company. Has real people working there. They pay real, I don't know if Starbucks and Costco pays dividends, I don't know. They make real money, real earnings for the shareholders, of which, I'm not one of Costco or Starbucks, but I am via the VTI. I'm not dumb. I don't invest all my portfolio in all individual stocks. That's just dumb. Do whatever you want, I'm saying. Have the VTI as your hedge. Have some bonds, have some stocks as your hedge too. But the idea that the market's going to crash because it's all-time highs or it's overvalued, dude, we've heard this for so long, and who knows, man? You just don't know. So if you don't know, just join the market and just look out the window. That's all you can do. All right, God bless. We'll see you.